You are 26 years old and you are bored out of your mind, which is, in retrospect, the most dangerous thing a person with your specific gift can be. The office where you spend 60 hours a week occupies the 14th floor of a glass tower in Mexico City, and it smells like recycled air and someone else's ambition. Your title is Senior Audit Associate. Your specialty is finding the number that doesn't belong, the single figure buried inside a column of 10,000 that shifts the weight of everything around it. You have been doing this since you were a child. Since you discovered that your brain processes numerical patterns the way other people process faces, instantly, emotionally, with a certainty that bypasses logic entirely. Your supervisor calls it a gift. You call it a condition. Either way, it pays the rent and nothing more. You are reviewing a textile import company's quarterly filings at 11 in the morning when your phone rings. It is your younger brother, Mateo, and you answer because you always answer, because he is 22 and reckless in the specific way that people who never learn to be afraid tend to be reckless. He is not on the line. A man is. The man tells you, in a voice that carries no particular emotion, the way a scalpel carries no particular emotion, that Mateo owes a significant debt to people who are serious about collection. He tells you the figure. It is not a number your brother's salary could produce in 6 years. He tells you that there is an alternative to whatever you are currently imagining. He tells you to come alone to an address in Polanco at 7 that evening, and that you should bring nothing except your professional credentials, which he already knows by heart because he reads them back to you in order. Your accounting certifications, your graduate degree, your 3 years at the firm, your particular reputation for finding errors that other people miss. Then he hangs up. You sit with the phone in your hand for 4 minutes. You know this because you are watching the clock on your monitor, and the numbers are the only real thing in the room. You are not thinking about the ethics yet. You are thinking about probability trees. You are calculating outcomes. You understand with the cold clarity of someone who has spent a decade staring at the relationship between cause and consequence that there is no version of this evening where you do not go. That is not a moral failure. It is simply arithmetic. The man in Polanco is not what you expect, which is your first lesson in a long education about expectations. He is soft-spoken. He wears a good watch. He asks you, without any theater, whether you understand what the organization does, and you say yes because lying about knowledge you clearly possess would be both pointless and insulting, and you sense immediately that this man is not someone who forgives being insulted. He tells you that your brother's debt is erased the moment you accept, and that your compensation going forward will make your current salary look like a rounding error, which is a choice of metaphor that tells you something about how he has prepared for this meeting. He slides a file across the table. Inside it are the financial statements of 14 companies. He tells you that these statements will eventually be examined by government auditors, and that he requires them to be, in his word, unimpeachable. You look at the statements for 90 seconds. You find 7 errors without trying. You tell him this. He smiles for the first time. You start the following Monday. The first thing you learn is that money laundering, at its structural core, is an accounting problem. It is a problem of origin. Cash generated by the movement of product has no legitimate history, no paper trail that connects it to any declared enterprise, and the entire discipline of what you are now being paid to do is the fabrication of that history in sufficient detail that it withstands scrutiny. This sounds, from the outside, like a creative exercise. It is not. It is an exercise in negative space. You are not building something. You are building the appearance of something that already exists. The distinction matters enormously. Your first assignment is a chain of car washes in Guadalajara, 11 locations. You sit with the cash flow numbers and you understand immediately that the reported revenue is approximately 3 times what 11 car washes in those neighborhoods could plausibly generate in a calendar year. You begin adjusting. You create variance by location, introduce plausible seasonal fluctuation, build in equipment maintenance costs that explain cash outflows to shell vendors you will create separately. The shell vendors require their own infrastructure, registered addresses, tax identification numbers, rudimentary transaction histories. Within 6 weeks, you have constructed an ecosystem of 11 primary entities and 23 supporting ones, and the money moves through them in patterns that would take a dedicated team of forensic auditors 18 months to fully trace, by which point it will have moved again. You tell yourself, during these first months, that this is temporary, that you are doing this for Matteo, who is now working at a construction company the organization controls, who calls you on Sundays and sounds, for the first time in years, like he is sleeping well. You tell yourself that when the debt is settled, when the immediate danger has passed, you will find a way out. This is not self-deception exactly. It is more that you have not yet fully calculated the exit problem, and you are someone who does not like to commit to a course of action before the numbers support it. By the end of your first year, you understand the exit problem. You are managing financial infrastructure for an organization that generates, conservatively, $400 million annually in cash that must be made invisible. You know the structure of every shell company in the network. You know which political contacts receive which payments, routed through which intermediary entities, timed to which fiscal quarters to minimize audit exposure. You know where the money goes when it crosses into the United States, which real estate holdings absorb it, which agricultural export businesses carry it to Europe, which cryptocurrency exchanges handle the remainder through layering strategies you designed yourself. This knowledge is not an asset. It is a liability that makes you indispensable, which is a condition that is indistinguishable from captivity if you look at it from the right angle. You do not look at it from that angle. You focus on the work. The work, you discover, is genuinely interesting, which is perhaps the most corrupting thing about it. The problems you are solving are real problems, complex and evolving, and your brain, that brain that has been categorizing numerical anomalies since childhood, engages with them the way it never engaged with the textile import filings on the 14th floor. You are restructuring a network of Panamanian holding companies to respond to new international transparency regulations. You are developing a real estate investment strategy across 4 countries that generates legitimate capital gains from illegitimate principal. You are designing financial instruments of such layered complexity that the organization's money, by the time it reaches its final destination, has the clean, well-documented history of old family wealth. You are very good at this. You become better every year. By your 3rd year, you have a team. 3 analysts who know only their discrete portions of the operation, who see their section of the ledger and nothing more, because compartmentalization is not just an organizational principle, it is a survival mechanism. The Americans are your primary concern by year 4. The DEA has dismantled 3 rival organizations using financial forensics, working backwards from wire transfers and real estate transactions to map organizational structure. You read the indictments the way a soldier reads battle reports, clinically, extracting tactical information, looking for the specific vulnerabilities that were exploited so you can assess your own exposure. The pattern that emerges is consistent. Organizations fall when their financial infrastructure becomes too centralized, when too many threads lead back to too few nodes. You begin a deliberate decentralization. You fragment holdings across more jurisdictions. You increase the number of legitimate businesses absorbing cash, reducing the revenue inflation at any single entity to a level that falls within normal variance. You introduce new layers between origin and destination, accepting lower efficiency in exchange for increased obscurity. This is the calculus you live inside, efficiency against exposure. Every time you streamline a process, you create a pattern. Every pattern is a vulnerability. You are in a constant negotiation between the organization's demand for accessible capital and your professional obligation to ensure that accessing that capital does not create a trail. The organization's leadership wants money to move fast. Fast money is visible money. You push back. Consistently, with data, with specific examples of organizations that moved fast and are now the subject of congressional testimony. They listen to you. This is the other thing about being indispensable. You have leverage you would not have otherwise, and you use it in the only direction available to you, which is toward continued survival. There's a moment, somewhere in the 5th year, when you stop calculating the exit. Not because you have decided to stay. You have not decided anything so clean. It is more that the future has become a concept that functions differently for you now. You plan in fiscal quarters. You assess risk in rolling 18-month windows. The idea of a life structured around something other than this particular problem set is not frightening or appealing. It is simply abstract in a way that actionable decisions cannot afford to be. You focus on what is in front of you. What is in front of you currently is a problem. A mid-level coordinator in Sonora, facing his own legal exposure, has given a name to federal investigators. Not your name, a name 2 nodes above yours in the visible structure. But 2 nodes is not the distance it used to be, because the investigator who received that name is good. You have read her previous cases and you understand she is the kind of person who finds the number that doesn't belong. And you need to assume that she will keep pulling the thread until it leads somewhere. Your response is already in motion. Not violence. Violence is the blunt instrument of people who haven't thought the problem through. Your response is structural. The entities closest to the exposed node are being dissolved cleanly, assets transferred through legitimate merger activity to new holding structures in jurisdictions with stronger privacy protections. The evidence the investigator is hoping to find will simply not be where she expects it to be. The thread will end at a wall. You work through the night on this. You're 33 years old. You have aged in a particular way, not visibly, not in any manner that a photograph would capture, but in the way that people age when they spend years making decisions that cannot be shared, in the way that a specific kind of alertness becomes permanent and indistinguishable from the person carrying it. Mateo got married last spring. You attended the wedding, sat at the family table, drank enough to feel something like ordinary. The restructuring is clean. You check it 3 times, because 3 times is the minimum, and you stopped trusting minimums years ago. The paper trail ends where you want it to end. The investigator will find activity, will find entities, will find the specific shape of absence that tells a careful person that something was here and is now not here. She will know. Knowing and proving are different problems, and proving this particular architecture with the resources available to a federal investigation in the current budget environment, operating across the number of jurisdictions you have deliberately introduced, that is a problem measured in years, and years is the currency you are always trading in. You close the laptop. Outside, Mexico City is beginning its morning. The numbers you have spent the night rearranging exist nowhere except in filing systems that are correct, compliant, and legitimate on their face, and in your head, where they have always been the clearest. That is the problem, finally, that you have no solution for. The numbers are always in your head, the structure of every shell, every transfer, every layered holding company, every political payment dressed as a consulting fee. You carry it the way other people carry language, automatically, completely, without the ability to simply stop. You are the ledger, and a ledger, once written, does not get to decide what it records. The city brightens. You are already thinking about the next quarter.